Good morning, everyone. It's May 12th, USDA Crop Report Day. I'm coming to you from Geneva, Switzerland this morning. It's where we hold our GrainCom conference annually. The US delegation and the Chinese delegations were leaving. There were some people left over in our hotel, but the exciting news over the weekend is that a big drop in tariffs. 115% drop from the United States and Chinese side, so that the tariff level is 10% on US goods heading into China, 30% on Chinese goods heading into the United States, a big reduction, and the markets are breathing a sigh of relief. The Dow's up over 1,000, crude oil's up over $2.50. We're seeing the gold market fall over $125, a sharp break there and a dollar stronger. So as we look at the day, I think grain prices would be higher if not for the USDA report. Ben, I know you're going to get into that, but I think that's the key of the day. We'll see how the market reacts. But at least for now, everybody I'm talking to is hoping for a bearish report so they can cover some of their short positions and maybe position long in terms of what may happen with the U.S. and China going forward. I've said many times the U.S.-Chinese phase one type of agreement completely changes the landscape for the egg markets. We'll see what happens. But Ben, what do you have for us here this morning?
Yeah, so I think the focus is a almost complete thawing of tension between the U.S. and China. But it is WASDE report day, so we start with that. That's going to be a key driver, at least for 10 or 15 minutes once the report's out at 11 o'clock Central Time. And the expectations, again, we've talked about this a couple of times, there will be no secrets here. I think the one piece of uncertainty is what has the USDA done to new crop U.S. soybean exports, given the policy as of 48 hours ago was pretty steep tariffs on U.S. Goods going into China and vice versa. Since that was policy, it is possible that they ratcheted down their expectations for new crop soybean exports from the U.S., but we're not totally sure. We've never been sure if they changed from their baseline number all that much. We thought they would, but in any case, the idea going into the report, at least as of Friday, was that modest to substantial building of U.S. stocks. But again, that was not a secret. The USDA has sort of foreshadowed that since February and really even since the latter part of 2024. So I think that's what we're dealing with. We've talked a lot about the market trading. Kind of short term, what is the risk this week? What is the USDA print for U.S. and world stocks? That's been a pretty key driver of price. And so most likely it will be steady to higher across the board. And you can see here the average expectation for new crop corn stocks just above 2 billion bushels. So that is up almost 500 million bushels from where they were for old crop stocks in April. So it's not going to be a bullish report if we just highlight the numbers and the math involved in that report, but it's also just a base. So I don't think the market's going to trade what the details of May WASDE are for too long. We have seen pretty substantial changes in U.S. in stocks from May to final for a variety of reasons. In the case of corn and soybeans, mostly those have been negative. So the USDA dials down or reduces their in stocks forecasts. I don't know if we're dealing with something like 2019, 2020, that does throw some more uncertainty into what we think finally happens at the end of the year because of the U.S.-Chinese potential trade deal. But thinking about 2020, when we were dealing with COVID, still tension between the U.S. and China. U.S. corn in stocks in May were projected above 3 billion bushel. And, we all know ultimately we got to kind of a multi-year bull market by the end of that year. So stocks were down from the USDA by 2 billion bushels from May to the final count. So again, it's all weather. It's all trade policy. Whatever the USDA prints today is very likely going to be wrong. It's just a matter of degree and direction. Same thing in soybeans, changing U.S. soybean in stocks from May to final by 70 to 300 million bushels is not uncommon on both sides of the ledger. So again, this is just a base from which to build. We'll start to focus on, I think, U.S.-Chinese trade details, as well as weather, again, probably by 11:30 a.m. Chicago time. Wheat's been a little different. I think the wheat market, unlike corn and soybeans, where we've had yield challenges, demand growth for the most part of the last decade, we just can't seem to find U.S. wheat export demand. So that explains why the USDA in its May report is typically too low and by a sizable margin, especially you see between 2014 and 2018. But again, after about 11:30 a.m. Central Time, we'll be back to U.S.-Chinese trade details. And what's surprising about this is, I think, like you mentioned, Dan, the market is pretty optimistic here. We saw some kind of ho-hum reaction to it in the early overnight hours, and now the Dow being up over 1,000 points. Soybeans up nearly 20 cents. That's dominating headlines. I think the entire focus for all of financial and raw material markets is on what happens. What are the details that we know currently between the U.S. and China and what happens next week. We're going back to meet with them again. So this is all, I think, very promising and kind of lingers in the background. Does China in the U.S. to solve economic issues commit to buying lots of U.S. agriculture? Because the phase one agreement, that framework does exist. So you just kind of hit play if that's part of this. And so we'll see. We'll see if we get anything concrete. What's interesting, I think, this morning as we look at the Dow up over 1,000 points, soybeans adding premium, poly market, the world's betting market for everything, the biggest predictive market, I think, on earth, is giving the U.S. and China 100% chance today that a trade deal is done before June. And so that is, I think, what is new. We've talked about the tariff levels being unsustainable. There has to be a deal get done because of all the challenges in China, especially. But we thought it would take months and years, like what happened, in 2018 and 2019. But the market, in all their wisdom today, is expecting a deal, in the next 30 or 45 days. So I think that is the excitement. And what really kind of lingers in the background, it is positive for raw material markets. So that is, again, the entire focus after the WASDE release, and pretty soon after it goes back to trade policy.
Well, I think you're right, Ben. There's a structure already in place from phase one. The Chinese know each other. They know some of the U.S. people in the room, Greer in particular. So it's easy for them to hit the, let's go back to the old agreement, the format, the structure, everything is there. It wouldn't take long for them to say, okay, let's maybe ratchet up from 200 billion to 250 and go forward with this whole thing. So I think that's what the poly market is looking at and why it's so optimistic. But again, if China pledges to buy a monetary amount of grain, remember that it's based on monetary issues. It's not based on volume. And the one reason why the U.S. corn back in 2020 moved so much is that China came to the world market and bought over 20 million metric tons of corn. So it's a big deal in terms of what the Chinese do and what they carve out with the United States. Any closing words from you, Ben?
I don't think so. Yeah, it's going to be volatile. It's going to be an exciting day, of course. I think we kind of kick off the growing season as well, so we expect wide swinging, very active markets. But all the best with the market today, the WASDE report, and again, it's going to be, I think, an exciting week.
All right, everyone. Have a good trading Monday. Good luck with the report at 11 o'clock Chicago time. See that QR code in the right. If you want to take a trial of our service, it's $1 for the first month. Give it a try and see how you like it. Ben and Dan signaling off, and have a great day.